Yes, I
Perfect.
am. I am.
All right. Hello, everyone. Welcome to another exciting edition of our webinar. I'm always very excited about this, as you can tell. Today, we are going to be talking about building a remittance company for the Africa corridor. My name is Segun Adeyemi. I'm the co-founder and CEO of Anchor, and I'll be the host for today. Today, I'm very fortunate to be joined by two incredible founders who are actively building the future of remittances for the continent. And they're building way more than just remittances, but I'll let them speak to that. Today, we have Tope, who is the co founder and CEO of Afriex. Tope, good to have you here.
Great to be here.
Awesome. And we also have Ayodeji, who is the co founder of Veloremit. Good to have you, Ayodeji.
I'm good to be here, sir.
Awesome. So today we're going to be unpacking what it really takes to build and scale a remittance company, a cross-border company in Africa. And we are going to go right into it because we have a lot to cover and we have just 1 hour. So we're going to try to keep to time. So I'm going to start with you, Ayodeji, and we're going to take it back to the beginning. I want you to tell us what led to you building a company in this space. Talk about you're going to answer the same question, so you can start preparing. But we're going to start with Ayodeji.
Okay, thank you, Segun. So I think for me, the idea of running a company that is focused on remittances started in business school during my master's program. Maybe at first, just to provide some background, I decided to pursue my master's program after had probably had like 10 years of experience, and I was looking for what next for me in terms of what area would I pivot into. So as a background, I'm still a trader, and I've been in the financial services industry for the past 18 years. So I was just looking for something else, and one area that appealed to me then was in the area of development finance. So during my program, I learned more about, or sort of researched more about the importance of remittances to Africa, because I've always had a passion of, okay, what's going to be my contribution to Africa? And that was also what led me to choosing that program. And I also chose to study in Africa as well, so that I'm not just looking at a model that has worked somewhere else, but something that could be applied in Africa. So that was actually how I stumbled on remittances as part of my work. And that was when the journey started. But I mean, the rest is history, but it was mostly around the COVID era that I had time to think more about it, and also worked with a few of my friends as co-partner or co-founder as well. So that I think that was just a story for me.
Yeah, thanks a lot for sharing that. Tope, I don't imagine it's a similar story. So I'm excited to hear about your experience.
Yeah, not too different. Not too different. I was born in Nigeria. Moved to the States when I was about 9 years old, and so I always lived my life sort of halfway between the U.S. and Nigeria. Mom would bring us back every 2 or 3 years, and so it was always kind of a part of our upbringing. I grew up in parts of the U.S. that had a lot of a very large immigrant population, and so I would always, go with my mom to Western Union to go and buy, phone cards to call Auntie CD, and so it was really just a part of our childhood growing up that, those in the diaspora were sending money home to support family, invest in businesses, and so forth and so on. Now, fast forward, I become an adult. I'm working in tech, and those I think those beginnings always kind of rung in the back of my mind. I got to a point in my career where I felt like, okay, I was ready to try something on my own, and myself and my co-founder John actually were, I would say, experimenting with a few different products. Right, we didn't come straight to remittances initially. We spent some time kind of working together, building things. Actually left my job in Silicon Valley, moved back to Nigeria. Me and John are just kind of sitting in a co-working space and tinkering. And it really hit us because we would always have to send ourselves money from our US accounts. Right. So while we're like having these wild ideas and whiteboarding, it was like, oh, actually, I need to send. So in that process, we're like, wait, why is this thing taking so long? Right. Why is it so expensive? And so it was really through that process that we kind of came to the idea of like, okay, well, let's build this to solve for ourselves. We weren't FX guys. We were really two engineers experimenting with stuff, and that's how we came up with it.
Oh, awesome. And I'll just stay with you to ask that. Now I see that the idea has evolved a little bit. So what does the vision look like now? What are you building towards? Like what would you say is success for Afriex?
Yeah, I mean the vision is really to it's much more than money transfer. It's really about building a bridge between emerging economies and developed economies, because when the transfer is faster, it's cheaper, you can do a whole lot more, right? You can support your family better. You can invest in businesses. The two economies really become almost like one economy, and I see, we see a lot of impact in that, and so that's what we're building towards.
Yeah, Ayodeji, I'll let you also speak to this a bit because you mentioned that your journey in development finance led you to remittances. And I would just want you to like talk about that a little bit more in terms of what is the goal, what does success look like for you as well?
Okay, thanks, Segun. I think success for Veloremit is seeing us become a household name in the remittances value chain. Like I said earlier, it's beyond just remittances because there are other services, associated services, or probably even different from what is being perceived as remittances these days. Because you could look at it as in terms of just diaspora sending money into frontier markets or emerging economies, but you could also look at people who are based in emerging economies that also offer services to the rest of the world, and they're also looking to get paid. So
Mhm.
remittances can be looked from those angles. So for us, it's just seeing us being a household name in that space. And I think we tend to focus more on three pillars, which we call like S cube for us. I think one is speed for us, which you would have seen from our name. Veloremit is more like derived from velocity, which is a derivative of speed for us. But we also look at security. So we want people to be able to perform their transactions in a secured environment, which sort of links to trust, and then service for us. I think those are the three key pillars: speed, security, and service. So if we are able to if we are able to provide services to our clients or our customers using those three pillars, and we become a household name, then we'll deem ourselves as being successful in that space.
Okay, that's interesting. We'll come back to that. Before I let you go into a bit of selling, I'm going
Yeah.
to take it back. You started speaking to the landscape, and I would
Yeah.
just want you to help the audience understand. There's a lot of interest in that space right now. There's a lot of investor money coming into remittance, B2B payments, cross border. And sometimes people are like, oh, there are so many companies that allow me to send money from the US or from the UK because they don't really understand the different dimensions of the landscape, the different corridors, the different, areas you can play. So, I mean, let me just start with you, Ayodeji, because you already started speaking to that. If you can just go a bit deeper to help us understand the remittance landscape, the cross-border payment landscape better.
Okay, I think the key areas we could look at would be the B2C or the B2B, which is just the simplest way to look at it. I think the one people are very familiar with, especially the end users, is on the B2C angle. So you have someone who is in, let's say, the developed country, or even it could be intra-Africa, and they're trying to send money to you in Nigeria, for instance. So that's one customer to another customer. So effectively, you're looking at just a customer sending money from one person to the other. And then in that instance, what you're looking at is what is very critical at that point is the speed and convenience. Because I remember, Tope talking earlier, and he mentioned something like Western Union. That used to be the traditional way in which we know money were moving across, as cross-border payments were being processed at the time. So where someone goes to a bank or goes to a kiosk to originate a transaction, they send the money to you. You as a beneficiary, you need to walk into a banking hall with your security code and your means of ID. So I think that is an area that was like it is definitely not efficient. And I think what we've seen now is most of the remittances platform have been able to solve that problem. So that speaks to the area of speed. So for B2C transactions, speed and convenience is what is very important. But you also have the B2B angle, effectively, which is more like you have to, let's say you have to pay for some items that you're importing as a business. So one business is paying another. So you also have people that specialize in that area that ensures that you can make cross-border payments seamlessly as a business. So I think those are just like the two levels we could speak to. For us at Veloremit at the moment, we focus more on the B2C angle. Then we know B2B will sort of be like an area to focus on later. But those are just like the two broad ways to look at the landscape.
Yeah. Tope, would you like to add to that before I go to the next question I have for you?
Yeah, I think you know, my view of the you said the African remittance landscape,
Yes,
right?
I mean you can go global really, but just because of the context of the conversation,
Mhm.
we're just trying to keep it simple to understand it from like the African landscape first.
Yeah, no, I think it's a great place to start. I think it's actually one of the frontier spaces, even globally. So my view is it's very dynamic, right? You have new entrants like Afriex and Veloremit. We're seeing record inflows, record FX volume movements across corridors as well. So there's a lot of like really amazing action, but then there's also a lot of let's say patchiness in the product, right? So there's like silos where some countries are mobile money, some countries are banks. Mobile money and banks don't really talk to each other well. You still see high failure rates in some markets as well. So, and then also you still have, at the end of the day, you still have the cash market, which is very dominant in some places. And so it's an amazing and dynamic market right now. There's a lot of new entrants. The new fintechs are really driving technology, but a lot of the volume is still with the traditional players. And then
Yeah.
also the regulatory and sort of like payout networks are still a little bit patchy. So I think there's still a lot of opportunity in the space.
Yeah. And that's also the question I was going to ask you, because if you look at the MoneyGrams and the Western Unions of this world, they still exist. But it feels like every generation or like every 10 years, there are new wave of remittance companies. There was World Remit and Sendwave. There was a massive acquisition or M&A that happened at that level.
Zaps, yeah.
And even though, even after that, before that happened, there was Western Union, MoneyGram, and the likes, and those guys are still around.
Mhm.
And yet, it feels like there's a whole new generation of companies like Afriex and Veloremit, and so many other companies doing amazing things in the space. So my question is like, what is the driver of that trend? Like, what is changing at every point in time where it just feels like there are new waves of upstarts, and somehow they are still able to get significant market share, they're still able to get significant mind share, and you'll be like, what are they able to do that, the MoneyGrams and all of that,
Mhm.
that are not able to do? So maybe I'm asking for you guys secret sauce, but I just want you to put those things in perspective, because these are like conversations that people would have and say,
Yeah.
but MoneyGram allows me to send money via a mobile app and via web. So what's the innovation?
I think each generation, and I think you said it rightly, there are different generations of money transfer companies. The market can bear all of them because cross-border payments is literally the largest asset class of money in the world, right? Every day, businesses and individuals need to pay other businesses and individuals around the world. The nature of economy is that money changes hands. So, like cross-border payments is literally the largest, class of assets in the world. And so the market is large enough to bear new entrants, and each generation is born out of a new set of needs. Western Union is a 100-year-old company that started out with railroads and telegraphs, and so that came out of a different time with very different technology, very different rules, and they solved a need at that time. Then, like you mentioned, you have the send waves and the transfer wises, and a lot of those really were born out of the the transition to mobile, right? People were tired of going to the kiosk and waiting 2 days and writing down long tracking numbers. So literally just by going from that to a phone was enough to spark a whole new generation of money transmission apps, even though it was still slow and still not necessarily affordable. And so now this new generation is really being born out of extreme speed and extreme affordability. And a lot of that is really also being driven by like the underlying rails themselves are getting faster. Swift is faster. You have new ways to move money across borders, with the advent of stable coins and things like that. So the underlying rails have become faster. New entrants are taking advantage of it to provide like blazing fast, super affordable services. And so that's kind of what's driving this next generation. And on top of that, you probably had value added services. So you're moving more from money transfer into almost like a full banking experience. And so this may be the last generation, but
AI, so there's gonna be a point where you just tell the agents, can you send $50 or £100 to my brother in South Africa or something? But yeah, we'll see. Because with stablecoin and AI, you shouldn't have to log into an app to send money back home. But yeah. So don't assume that this will be the last generation.
Right, no, it's a joke. But
that you want to build the innovation of, you want to be the last set of companies in that space, such that the new innovations are pioneered by the likes of Afriex, Veloremit. So I guess that's another way to look at it. Okay, now let's take a step back a bit. Let's talk about some of the others. As much as it's quite exciting, it's also not an easy area to play, and that's why people are trying, but then a lot of people also struggle in the space to actually build like a sustainable business in it. So I'll come back to you, Ayodeji. When you guys were starting out, you said you mainly started around COVID. What were some of the others you had to navigate? What are some of the things that stood out for you that maybe you didn't anticipate or you didn't think was going to be as much of a big deal that it turned out to be?
Okay, thanks, Segun. One of the famous hurdle in the remittances space is actually from a regulatory angle. Like you said, it's very critical because you are not able to operate without it. So I think for us, that was a major shocker. Especially, we started operation just over a year ago. So, and I think one of the factors that contributed to that was crossing that regulatory order, because in most markets, you need to be licensed. And those processes are not very straightforward. They are not actually made for new entrants. So you always need the experienced hands. And you've also got instances where maybe you think, oh, members of your team have got compliance experience. But in most instances, it's not just the generic compliance experience. So you have the regulators. So I'll give you an example. If you look at the UK, you have the FCA seeking people that have experience like over 10 years in the money service industry itself. And probably, I don't think we don't have a lot of people in that. And especially for a company that you're bootstrapping, it's going to take a lot of resources off you to be able to get that. So I think that was one major order for us. But beyond that, you also have, even in terms of the systems you're building, I think that was one of the decisions we struggled with at first. Do we want to just get a white labeled off-the-shelf system, or do we want to build ours from the scratch? I think navigating that was another challenge. But eventually, when we did all the analysis, we realized that an off-the-shelf system wasn't going to work for us because the market is extremely competitive and you need to be able to adapt. You need to be able to make changes quickly. You need to listen to your customers and you need to implement what they want. And if you're using an off-the-shelf package, you won't be able to respond as quickly as it is needed. So I think that was another critical area for us. Then I think one other key thing is then in the area of people. You need the right experience. And like I mentioned, for us, we weren't just out to we want to come up with this idea and want to raise funding straight away. That wasn't our intention. Our intention was to grow organically. Our intention was just to grow with the people we've got. So we had to be innovative with the the contract we have with our employees to make sure that they are also, it's more like a partnership model. So having the kind of people you trust, because it involves money. So you need to be very careful with the people you're dealing with, but also people with the relevant experience. So I think talent is another area that we initially struggled with, but we got hold of that. And it's one of the factors that also differentiates us. I think those are some of the key areas that we had to grapple with at the beginning.
Yeah, any additions to that topic? Or were there specific things that was unique in your own case?
No, yeah, great question. I think when I think about the early struggles, and I guess this advice for any travelers following the same journey, the top three things you're probably going to face are fraud, customer service, and regulation. These are the three main classes of challenge that you will face, aside from the normal challenge of building a
Yeah.
so again, fraud, customer service, and regulation. And the one that will sort of be with you the longest is the regulatory part, as Ayodeji mentioned. At some point, you should figure out a way to solve fraud. You would have to figure out a way to solve customer service if you want to stay in business. But then the regulatory part is a human element, and it's something that will kind of stay probably throughout the life of the business. I remember early on, the big challenges was really getting a bank account, right? Like getting a bank to trust you. This African guy is sending $1 million to Africa every day through this bank account, and so making sure that these companies are can fit into their systems and comply with their local laws, and understanding that compliance frameworks are also different across various countries. So being able to play with the landscape of that country. Canada is different from the US, which is different from the UK, which is different from any other jurisdiction that you might be playing in. And so definitely I would say over the life, if you're going to work in finance, getting close to regulators and banks, because the banks also can behave like regulators as well. And so just being close with the regulators is a very, very important factor.
Yeah. Okay. I mean, the regulatory conversation is a big one, and it's definitely one of the things that in this space you have to pay a lot of attention to. Is there anything you guys do, maybe in terms of how you're set up, or something like a practice that you have in your respective companies that ensures that you're proactive about your regulatory engagement, about your compliance framework that people can learn from? Any ideas, any thoughts that come to mind?
I mean, you have to build.
For example, maybe just to put it in perspective, right? If you wanted to open a new corridor, like you wanted to start doing remittance into Kenya or South Africa, do you guys have like a regulatory strategy that you say, okay, we do this?
Mm-hmm.
We try to make these conversations as practical as possible. So I like to be super specific.
Yeah, great question. I think that it's a relationship. It's all about building relationships with the players, with the banks. I would say the banks first, because a lot of times the regulators see the banks in most cases. Like this is who they have the most respect for. And so if you can, and usually it's easier for you as a financial service or a fintech to approach a bank directly rather than approaching regulators directly. And so a lot of times the banks can give you the tea on how you need to set up before necessarily approaching the regulator. So for us, we try to build the best banking relationships we can, and then layer on top of that licenses, right? So you meet a banker, explain what you're trying to do. If possible, also meet a regulator. But in my experience, the banks are a very reliable first step.
Yeah. And Ayodeji, do you want to comment on that? Because I have a follow-on question. Yeah.
No, sure. Yeah. I think for me, and also at Veloremit, what we do basically is more of a risk assessment first of whatever corridor we're going to operate in. Because you have instances where I think at the moment we have about 14 African countries that are on the FATF gray list. So what it means is if you're originating transaction, let's say from the UK, and you're sending to any of those countries, so there's enhanced due diligence that needs to be carried out, right? And there's a lot of regulatory scrutiny because they are wondering, okay, why are you transacting into this corridor? Because of the fear of money laundering or countering financial terrorism. So those are the factors that make I would say, regulators in the developed market very wary when you're transacting in those corridors. So what we do at first is to document our risk assessment of that jurisdiction. And we also highlight the controls that we have in place, that we ensure that those fears are being allayed. So we ensure that the screening we're going to be conducting on the customers. These are the screening we're going to be conducting on the beneficiaries. These are what we're going to be doing in terms of transaction monitoring to ensure that we're able to pick suspicious transactions. So those are the steps we go through to give the regulators comfort that we're operating in this corridor, but we understand what the requirements are. We understand what the objectives are. We understand your fears. And these are the processes we've put in place to be able to allay those fears. So I think that's the way we approach it at Veloremit when we are looking to operate in a new corridor, because we just have to speak to the fears of the regulators and give them the comfort that even though we're operating in this jurisdiction, we're still operating with the standard you would expect us to, even if we're operating in a more, or maybe in a company in a country that is not on the gray list or that is not blacklisted.
Yeah. Okay. Thanks a lot for that. Tope mentioned and emphasized the banking relationship, and I would add to that also, of course, you have the local rail providers like Anchor who also help with the payout and with the collections, and also sometimes with the banking relationships as well. So those are different relationships at different levels that you need to manage. Now, maybe for someone like Ayodeji that has spent 10 years in banking before starting the remittance company, you can say, okay, you have a relationship, but then you have founders, you have engineers, builders who haven't worked in financial services, who just are innovators and great engineers like Tope, who, they have the idea, they have the vision, and they want to push. How do they go about building those relationships? Are there specific lessons that you have learned in your experience about building those key partnerships and relationships with the banks, with the regulators, with other infrastructure providers like Anchor, that you think would be very helpful to just talk about or speak to here? I don't know if Tope wants to start on that.
Yeah, I think the key word is relationship. At the end of the day, these are people behind these institutions. And so getting to know them, for us, many of the most successful relationships started with one single personal relationship that was able to really open the doors for particular institutions. And so, it's a relationship. You should cultivate it over time. You may want to have a backup in case things don't go the way you expect it to go. And so that for me is really the key, is to think of it. It's not just like a program. You just press the button and then you have to.
But you don't send like a cold LinkedIn email to this person and say, "Oh, this is what I'm trying to build. I'm trying to, we're going to need to use your rails, or we're going to need your bank to help us with this." Like, how do you practically, how do you go about it?
You should do all of the above, right? As a founder, your ability to cultivate relationships will have a huge impact on your success, whether it's fundraising, whether it's selling, and whether it's getting partners, right? So if you need to cold call, then cold call. I mean, for us, a lot of the success has come from, leveraging investor relationships or previous relationships to get new intros and things of that nature. Finding people that are aligned with your vision within those organizations is also very helpful. So, especially as you climb higher, it might not be as easy to just DM the CEO of a bank, right? So you might need to work through particular channels, but ultimately do what you need to do to get to the right people and build the right relationships with them.
Awesome. Thanks. Ayodeji, do you want to add anything to that?
Yeah, I think I've got a few points to add to that. I think the importance of a payout partner, for instance, it's very critical. It cannot be overemphasized because, usually give the example, if there's a failure on your platform because of the payment of the payout partner you work with, the customers don't see the payout partner, they see you, and they can drag you online, whereas you can't hedge that risk completely. And so I think as a starting point, one thing we have as a practice is, as part of our business continuity plan, is to avoid a single point of failure. So, which sort of speaks to the point that I raised earlier. You cannot have one single payout partner. And the reason is simple. You have instances where the payout partner is down, not because of issues within their control, but just because maybe NIBS is down, for instance. If NIBS is down, it's generic, or their banking partner is down, it affects you. So having that, not just for payouts, but for every aspect of your process is very critical, because even if, for instance, if you're handling your collection and your partner is down, you need to have a backup plan. So I think that's very critical. That's one learning point for us. And we've been able to implement that. And with that, you are able to improve your success rate. But beyond that, whatever partnership you're going to have, also you make sure it is not transactional. So I'm not just negotiating pricing and I'm looking at, okay, the partner that gives me the best price is what I'm going to go for. I want a partner that is going to grow with me, a partner that understands my unique needs, and we are able to grow together. So I think that relationship building is very critical. So it's less about the it's part of the conversation is the quantitative aspect, but the qualitative aspect is also important in terms of the customer support you get from your partners. That's very critical, because when things go south, that's what you leverage on to say, okay, how do we amend this, how do we fix this issue? So I think in building those relationships, those qualitative factors are very critical as much as the quantitative. So it's not just a numbers game. It's not just about who gives you the cheapest option, but who is going to be, who are you engaging with such that you're building a mutually beneficial relationship and it's long-term driven. It's not just about the short-term objective. I think those are some of the factors we look at, especially when we're talking about partnerships.
Yeah. I hope we've been that kind of partner for you.
Definitely. If you were not, I won't be on this call.
Okay, I'm glad to hear that. I'm very glad to hear that. Okay.
Yeah.
Both of you have spoken a lot about like speed, and there was also something you said, Ayodeji, about you guys have been building organically, and at the same time, there's all this like compliance burden, right? No, I don't want to use the word burden, but more like compliance requirements that you need to solve for, because those rules and frameworks and guidelines are there for good reasons.
Yeah.
So how do you balance all of this and still try to run a profitable business? Because you have to have all these partners, regulation, you want to move fast and all of that. So yeah.
Okay, yeah, I think, like you said, it's not even negotiable, especially when it comes to compliance. So you can't even try to rank compliance or maybe profitability on the same scale, because you need to comply to the regulatory requirements before you can even exist as a corporation or as a part or as a player in the industry. So compliance is very critical. But what you also do is you have a lot of partners that you can leverage on to make it easy. And I'll give you an example. In the UK, the requirement is very stringent in terms of what you need to get. And like I mentioned, if you're operating into Nigeria, you need a lot of information about the customers. But you're competing with other players that don't ask for a lot of information. So you need to leverage on technology to ensure that you get as much information, but make it very convenient for the customers. So I think one angle to do that, which is what we adopt, is through open banking. And I think that's probably like a topic you can speak to later down the line, because with that, you're able, just with a single click of a button, the customer sort of gives you access to their banking information, for instance. You don't have access to the account, but you're able to do verification of the customer, right? Easily. So within 2 minutes, you can onboard on Veloremit app. Now, it doesn't mean we are compromising on the standard. It just means we've leveraged on technology to be able to meet with the compliance requirements. So you need to ensure that you do your compliance in such a way that it's not burdensome on the customers, because if it's extremely burdensome, then they're not even going to sign up on your app at the first instance. So I think that's one critical thing. But what is also important is that customer service is very critical, because here in the UK, if your customers are displeased, they can report you. And when if the report is getting a lot, you can actually be taken off eventually. So that sort of links to your service as well, to your customer service. So you need to keep customers updated on status of their transactions. If there are any issues, you need to carry them along. You need to work with the customers, right? That's very critical. So then after that, you then need to still stay profitable to be in business. So navigating that is similar to just running any other business, but what is very important is the order in which you focus on those points. So you focus on your compliance, you focus on service, and then you might be profitable. So for us, like I mentioned earlier, we're bootstrapped. So we're not We don't have any investor fund to pay a lot of people, but we also have people that are talented, that are working, that believe in the vision of the organization. And it's more like a partnership model, like I mentioned earlier, where they are equally invested and they also capture the upside as the company grows. So different model will apply for different people, but that's the model we've decided to go with. So I think it's just very critical that you understand those factors and then prioritize them and focus on them accordingly.
Mm. Yeah, I mean, I think you've done justice to that. Thank you. Let me come back to you, Tope. The space is quite hot. I'm sure you've been seeing all the activities, both in Africa and globally, both from the crypto angle, the B2B payment angle, and even just the retail consumer remittance angle as well. And so there are two parts of the question. The first is like, what are the major drivers of, the increasing activity? I know you had mentioned earlier that the market is big.
Mm-hmm.
But the market has been big and it continues to get bigger, but there's just a lot of attention lately, especially from African fintechs. I said to somebody, I said, almost every company now, directly or indirectly, has a remittance angle. Even if what they are doing might be very far, it's only a matter of time. they are doing it somehow, somewhere.
Right.
So what do you think is the driver of that? But the second part of the question is, for you as the CEO of Afriex, how do you stand out from all that noise and that activity?
Yeah, great question. What is driving the explosion of activity, explosion of like new entrants into the fintech space? I think it's an old problem that where the solutions are starting to become more, people are becoming more aware of the solutions, right? So there's always been this FX problem in Nigeria, for example, and in most emerging markets where their currency is currently consistently being devalued against the US dollar, which is the base currency of the world. And so that's sort of like the core problem that emerging markets specifically face. And so due to that problem, there's like this tension of like, oh, I'm an importer, I need to buy something overseas. It's hard to get dollars. It's hard to actually perform that transaction. And then same thing overseas, the customers constantly feel like they're getting shafted by the remittance company because the rate that they're hearing is different from the rate that they're seeing. And so I think a lot of emerging market players are just entering the space, one, trying to solve that problem because it's one of the biggest problems across sort of the global south. And then two, the technology is easier. Like it's never been, this is the easiest time in history to build a fintech app. It was never this easy. It's so much easier to build software technologies. Back in the day, before tech, you would have had to open up different kiosks and shops and do that across wide geography. Now you have digital ads, you've got tech, you can use AI. There's so many more options. So I think the meeting of those two things is what's really driving the entrance into the space. I think over time it will likely cool as dynamics change in the market. Maybe people start to find other problems that they're interested in. And so, I think we'll see a change over that time. Now, you asked, how do we stand out? I think for us, this is obviously the $1 million question that gets asked all the time. I think for us specifically, is that we move fast, and we try things. Ayodeji spoke earlier about like the tension between growth and compliance. Because we come from an engineering background, we are able to come at things with very fresh perspective and just literally try. For example, we launched a travel card, dollar card for Nigerians that they can use to pay for things around the world. We launched USD accounts for Africans in different geographies so they can collect their salaries. We've experimented with allowing people to do like small amounts of transactions with very, very minimal KYC, being creative on the background. So we I would say as a culture, as a company, we move fast, not just in the transactions, but also like in the infrastructure of the company and like trying out new features. And so, yeah, that's what makes us different.
Yeah. Okay. Thanks a lot. So you think speed is It's a differentiating strategy. I actually like the sound of that. I don't know if you've seen this company that has been going viral. The Cluey, is it Cluey, the AI company?
I
And
think
their entire business model is like momentum as a service. They're just going to like outrun and outbuild everybody. So yeah, I like that style. I think I'm going to give you an opportunity to also answer that, at least the second part of the question, which is in an increasingly competitive market, how do you stand out?
Okay, so I think for us, I mean, yeah, the generic comments you could hear of in terms of what differentiates us, but I think one key thing that matters to us is our connection to our customers. So we ensure that we're connected to our customers. And how do we do that? So we ensure that, I mean, typically from our engagement with people that use different apps, it's more like you're just a customer, you do a transaction, it doesn't go through, you send a mail, someone is going to pick it up later. But we offer the ability for our customers to engage. We have a platform where if you've got any issue with your transaction, you could just tap and chat with someone. Not just, you could chat with an agent, or you could even do like self-service to query what's wrong with your transaction. So I think that connection with our customer is very important for us, which sort of speaks to our service. But also the speed is equally important. Our transactions are completed within seconds. So from the point where you initiate a transaction to when the beneficiary receives funds, it takes seconds. And I think that's one of the problems that's one of the problems that needed to be solved in that area, which we are also contributing to solving. But I think one other key driver of people playing in this space, because if you look at the United Nations Development Goals in terms of remittances as well, is focused on transaction costs. And their objective is, okay, how do we ensure that we bring down transaction costs to less than 3% by 2030? Now, for most of the frontier markets, the cost is still high. So as you have more players in this space, it's actually beneficial the beneficiaries are the customers, right? Because that competition drives people seeking for efficiency, and the customers benefit from that efficiency. So I think that's another driver. So for us, we ensure that transaction fees to customers is zero. We don't pay. I mean, it's not just us. I know there are a few players in that space that don't charge transaction fees. You have to then look for efficient ways to ensure that you still derive value from the entire value chain, from the entire transaction cycle, as opposed to passing that cost. While doing that, you still need to stay competitive with your exchange rate. But I think one other key thing that is very critical, which we also do, is transparency. Because I could remember when we started our model, when we started operating over a year ago, we had people comparing our rates with other service providers that charge like 2%. So they see a rate and like, oh, these guys are giving this. And I tell them, okay, have you looked at what the cost is? What does your beneficiary receive relative to what you're sending? That's your effective exchange rate. So not just the notional exchange rate that is being displayed to get you in, or some use that to like an intro price to get you in. And when you're in, you're stuck with a lower rate. So I think that transparency is also very critical. And that's one of the things that we also use to differentiate ourselves. So it's what you see is what you get. So there's no hidden charges. So once you send money, you know what the person is going to get. So that's transparency has also given the customers the comfort. And that's how we've built trust with our customers.
Yeah. No, thanks. I mean, you guys have mentioned very interesting things, but a trend, and you can correct me if I'm wrong, you guys are the expert, I've seen is when some people, when they want to send money, they have a couple of apps and then they'll just go and look at all the rates and then just compare. So, okay, I want to send dollars. Who's going to give you the best rate? I have this app, I have that app, and then they compare. And then you even see some companies, I'm not going to call names now, they'll literally put the other competitors on their page and then they're going to put their own rate and say, like, then it becomes a war, right? It then becomes like, okay, are we racing towards zero? Like, how do you compete when everybody's just basically playing towards price? So, how do you think about being able to still extract value when that is really the game? Even though you have, some of these beautiful things that you guys are doing for the customer, but the reality of it is that it seems like sometimes the first thing that matters to the customer is like
the exchange rates.
Yeah. So maybe I am doing it wrong, but I'm also trying to just think about it as a very typical just somebody sending money and not as a payer. So from that perspective, like, how do you guys, I just want to hear from both of you in very short words, how do you think about that dynamic? Is that the reality, or you think your own set of customers, they don't care about the price, it's about the service? They are very sophisticated. Yeah,
No,
Tope.
I think no, you're right. It's generally a price war. Customers are very price sensitive. Many of them are immigrants or low income, and so for them, it's a real concern. They want to make sure they're getting the most for their money, and so for that reason, in order to be successful, especially in consumer finance in general, you have to reach a certain level of scale. It's difficult to. One thing that makes this kind of business challenging is that you have a lot of overhead, regulatory, some of the things we spoke about earlier. In order to really be able to have staying power, you need some level of scale, and you want to get there, at some point. And then beyond that, while in general there is a price war, you do find customers who, at a point they don't care as much, right? Because they don't want to go through the
once the trust has been built, right?
You know what I mean? So the price war usually is to get them in, and then at some point, especially as they mature. So one of the things that we're seeing is that, I spoke earlier about like trends and why like the space is hot. Another trend that I didn't mention is like immigration. More Africans are immigrating to the UK, and there was like, or there is actually continuing a lot of foreign education and a lot of reasons why people move abroad. And so those customers, when they first get in, you just moved to a new country, you're probably the poorest you will ever be. And so every penny counts. But then 10 years later, 20 years later, it doesn't really, you're sending, 5,000 naira back home. Maybe it's not as big a deal, right? So, over time, those customers become less sensitive. And then you're able to build quite a good business on those customers as well, especially if you've reached that scale. And then finally, there are different aspects of the market, right? Like or different products. I've talked about a few products we have. We do also support businesses as well, and so being able to have a gallery of different products that you can kind of make money from also helps with that as well.
Awesome. I saw that Ayodeji also unmuted himself. I guess you also want to say something very quickly to this.
Yeah, so I think I agree with what Tope said. I think one key thing is you need to stay competitive on the rate as well, on the exchange rate, because that's what the customers see first. Now they need to experience that before they even know the kind of service you offer, before they know other products you offer. And you've got companies that can afford to lose lead with that. So they can pay you higher than what the market rate is just to get you in. Yeah. And they also, because they're just starting, they don't have a lot of traffic. So even if they are paying more, the monetary impact of that is minimal to them. So I think you're competing with that. But you also then have to pick to what extent do you want to compete. So you do want to go out to be the best rates, and maybe very soon you run out of cash, and then you probably don't even have a company again. Or you want to say, okay, we will do this. We'll make our rates as competitive as we can. We'll pass as much benefits as we can to the customers, but we'll also then offer other products to the customers, or we'll also ensure that we give them the service that they probably won't get if they were just somewhere else. So I think those are some of the things you could do to still stay competitive, but it's a real price war. It's highly competitive, but I don't think it's anything new. I mean, if you look at banking generally, you have a lot of banks operating in different markets. There are some instances over time you build loyal customers, people that like your service and want to stay with you. But at first, you still have to just use that as an inroad. But the extent to which you want to do that is dependent on the financial muscle you've got.
Yeah. Okay, thank you so much for that answer. I just want to mention that we would also be able to take maybe 2 or 3 audience questions. So maybe I'll ask about 2 more questions, and then anyone that has a question, please type your questions in the comment section, and we will be able to take a few before we round up. So if you have any question, please, now is a good time to let us know. Okay, now, I don't know if any of you have been doing something with crypto. And of course, if you've been online on LinkedIn, or anywhere on social media, you've been seeing like stables are everywhere.
Mm-hmm.
So I don't know if you guys are using that in your Rails. If you are, please, share in what areas you are already using it. And if you haven't, if you started thinking about it, where do you see the opportunity? What do you think it can solve for you practically? There was a debate recently. I think it was the founder of Airwallex that had a tweet storm, and he had a comment on LinkedIn where he was basically making a case that, the promise of stablecoin, even for remittances, is actually overblown, and that he doesn't see it. He thinks that there's a lot of opportunities, or there's a lot that Swift has solved for, and all of that. But I want to hear from both of you, like what role do you think that stablecoin specifically would play in the future of the remittance space? And if you're already using it in your Rails, if you can share how you're doing that today.
I think stablecoins can reduce settlement times and costs, especially in markets with broken banking infrastructure. I think what the Airwallex founder was referring to are probably like highly developed markets. Maybe they don't need, alternative rails, but I think in some parts of the world where the traditional banking infrastructure can take literally 5 days to do an interbank settlement, in those places, stablecoins can be beneficial. Now, at the end of the day, the customer doesn't care, right? The customer does not care if you use a stable coin, if you use a real or a dollar. They don't really, for them, they gave you money. They want to send their money to their mom. That money needs to get there as quickly as possible. And so ultimately, the user experience is what really matters. I think, smart companies use a blend of different methods to get the money, as long as obviously it's compliant with the jurisdiction that they're in. But what ultimately matters is how quickly, affordably, and reliably can you deliver those funds for that customer.
So have you guys started using it in your Rails or not? Or is it something you're considering?
We have used it or we do use it in particular markets, right? Certain markets you don't need it, like I mentioned, just like the Airwallex founder, in his assessment, it might be a waste of time. For certain markets, it's not necessarily, it doesn't really make any difference. And so
Because there's not liquidity on both sides. There's maybe like instant settlement rails.
Right.
The cost is really significantly reduced.
Exactly.
Yeah.
But then there's certain markets where the traditional infrastructure is like pretty much broken, and it's very difficult to deal with. And so in those markets, it might make sense for you to take a look at stablecoins.
Got it. Awesome. All right. I'd love to hear your take about that as well, Ayo.
Okay, so I think to answer your question, at the moment we do not use that. We do not use stablecoins as part of our process, or as part of our settlement process, and it's actually more because of regulatory limitations. Here you're not allowed to commingle. So if you have to, you will need to probably have you need to have a carve out completely for and be licensed as per that. So UK is very conservative in terms of the operating environment. So you need to actually stick to the traditional finance. Now, the objective is to make sure that your traditional finance can compete with on-chain solutions as well, like the stable coins. But I think it still doesn't take away from the fact that it's still a good innovation that could be applied in the remittance space. But even if you look beyond stable coins, you could also look at it even for CBDCs as well. Because those would be taken as more like a traditional finance tools, which would still meet the requirements of the regulators and still sort of apply the same concept. But beyond that, you also have like off-chain solutions that have been applied. You could have the use of AI for your transaction monitoring. You could use AI in your KYC or EDD process as well, in terms of gathering more information or real-time information about the customers. So I think there are different applications, but in some jurisdictions, you're not allowed to commingle, which means it would limit the extent to which you could combine traditional finance and more like a blockchain solutions.
Yeah. Okay. So maybe last question from me before I take the audience questions, right? There's still, we've touched on it a bit, but there's still a bit of like helping people understand what the back end looks like, So you're just literally educating like what actually happens under the hood when somebody in the US, in Canada, in the UK opens an app and sends money up until the point where their stepsister somewhere in Ekiti gets that money in their bank account, or someone in Diani in Kenya gets that money in their mobile wallet account. If you can just in very simple terms, either it includes crypto or not, like end to end, from the KYC to the open banking to the collection partner to the payout partner, just give us like a quick summary of what happens on the back end.
Okay, I can go for that.
Yeah.
So the way to look at it is, first, if you have to send money on an app, the first thing is you need to be registered. So typically involve like a sign up. And after that, they just get they will get like minimal information from you just to get you in. Then from that, you have platforms that will set like a tiny limit for you to be able to do transactions before you're fully onboarded. Or some would just say, okay, you know what, you can go straight to onboarding, but we make the process similar. So once you're onboarded, the next thing is you want to send money. Is you're probably sending money from your, let's say, UK to Nigeria, as an example.
Money, is there any verification that is done? So there's like a KYC, KYB provider that you use in doing those tests.
Definitely, there's verification that is done. There's your ID verification that has been done to make sure, okay, you do exist and you are who you said you are. But there's also address verification that is done. But all those could be combined. Like I mentioned earlier, you could use technology to simplify that. So you actually can tell the customer, I don't need you to send me any proof of address. If you've been living in the UK and you allow me to have access to just authenticate my access to your open banking platform, I could actually get the information. So I save you that stress, but I can get that. So that is very critical. As part of your KYC, you need to ensure that you have an understanding of who the customer is and their address at the minimum as basic KYC. Then after that, you want to send money. Then the next thing is you're sending money from your UK bank account. For us, we actually, like I said earlier, we use open banking. And the reason is simple. We know that there's a high fraud rate associated with the use of cards. So we typically just say for now, we just use open banking. And with that, it's seamless. You send your money just with a click of a button, you authorize the payment. Once the payment goes through, you have to do that as a payout part. You need a collection partner. So you need a partner to help you get the money from the bank account, the UK bank account. Then you have like another key area, which there's transaction monitoring to see where is the money coming from? Is it coming from the same customer? What's the source of that account? Because if you use someone else's bank account, our system will flag it that, okay, this fund is coming from an account different from the customer registered on your platform. So that's to sort of speaks to transaction monitoring as well. So once you do that, you have a payout partner, let's say in Nigeria, who is able to make immediate value. But all these processes I've described happens in seconds. So within the seconds, you also have the payout being initiated in Nigeria with a payout partner, and the beneficiary account is credited. I think that's just like a simple way to look at it, the process end to end.
Yeah. Okay. Thanks a lot for that. I think it's well covered, except you missed the very important part where you are supposed to say use a payment partner live. Because as we were just talking, I was like, essentially, that is the perfect place to plug in what we do, because essentially we are saying for you to be able to do all of that in seconds, we want to be able to enable companies like yourself to not have to like build the entire infrastructure. Acquiring customer is hard enough. Building loyalty, building trust with the end users is already a lot of work. So, we essentially provide all of the APIs, and we are now even expanding the scope of what we are offering, such that we're able to not just offer the local rails, but also offer the global rails as well. So we can do like KYC. So we're doing end to end, so that you don't have to use 10 different partners. You can streamline it. Even though I know you will still want to have a backup as part of your contingency plan, but irrespective, because we are reliable and we're building and solving for reliability as well, you wouldn't need those backup partners. So I just wanted to add that as well, just also to help people understand we do at Anchor. But yeah, this has been very interesting. We have just a minute to go, but if you guys don't mind, maybe we can do extra 5 minutes just to take the audience questions before we round up. And the first one is I think I've asked something like this, but I just want us to bring it up again. In a numbers game, that's from Amos Ferrami. What do you do to win loyalty of users? I think, Tope, you touched on it a bit, but if you can just go a bit deeper.
Yeah, I think the first thing you can do is customer service, right? Focusing on customer service is your first point of loyalty winning. So, I mean, regardless of what the design on the app is or the price or whatever is, customers will remember what you did in a crisis, right? That moment when, you know, somebody was in a hospital or somebody was at the airport and they needed to send, which app could they rely on? And so customer service is, I would say, that the very first touch point. And of course, on top of that, you can do many more things. We have a reward system in our product where you can earn points on every transaction. You can cash in those rewards for like Uber discounts or Adidas shoes. So, you know, you can go very deep on the reward system as well to kind of like create a point system and reasons for the user to come back to your product. But the very first thing is customer service.
Yeah, very, very well distilled. Thank you for that. And there's another question here from Amanda Atipo, if I'm pronouncing that right. It says, in terms of strategies for staying in profit or staying relevant in this game, were your responses from hindsight or were they intentional measures you had set before launching? Basically, what is the gap between your strategies on how to stay profitable or relevant before launch and after launch? Wow, this is very deep. I think you are the academic person on this.
Yeah,
So I'm going to
yeah.
I'll default to you for this question. Yeah.
No, not a problem. I think for us, we were deliberate from even pre-launch. We're deliberate in terms of how we were going to compete. If you're not deliberate, I think you're just going to be tossed to left and right because it's a very competitive market. So you need to be deliberate in terms of your strategy and how you want to stay profitable. Like I mentioned earlier, it's not like we have, there's a limit to the loss you can take if you're bootstrapping compared to if you're raising funds, right? If we've actually not done even a seed round. So if you're bootstrapping, there's a limit to the amount of loss you can take. So you then need to make sure your strategy is fit for purpose and is suitable to your own approach. So for us, we've done it in such a way that at the beginning, we had key talents that then they weren't earning salaries, but they had equity in the business. So which means we could still stay profitable because we weren't paying a lot and we are still building together and we pick the upside. So it's a function of the model you're trying to build. If you want to raise fund, you could take losses longer, but at some point also your investors are going to ask questions that what's the way forward in terms of being profitable. I know there are a lot of fintechs that are built these days that it's just about growth. You don't care about profitability, but that's still the engine. That's what's going to really make your growth sustainable. You can grow as much as you can, but eventually you still need to bring in cash. Otherwise, the questions will be asked. So I think when it matters most, you need to be deliberate with your strategy, and it's a pre-launch conversation, not just when you launch, because when you launch, you're allowing the market to dictate the terms for you. But if you're deliberate before launching, you already know how you're going to do. You would adapt when you start operating, but the key principle remains the same, that, okay, you want to stay profitable.
You know, I think you answered it in the last part where you mentioned adapt, because one thing I wanted to say is that in a very dynamic market, there's only so much you can plan ahead for.
Definitely.
Without knowing how the market is going to move or how things are going to change. So if you're like, it has to be this way, but I guess that's where the adaptation comes in, where you're just adjusting. There's another thing you said around grow. There's also the part where there's inflection point. Where at what points can you afford, because there's so many things you can do because you're trying to also, be profitable from day one. So it's you've been doing it for a few years now, and it seems like you guys are making it work, and kudos to you on that. I don't think a lot of us, some of us are fortunate to be backed by venture capital, and we're still trying to be as fiscally disciplined as possible. But there's also a part where you need to grow to a stage that you can then, you can then start optimizing for sustainability of profitability, but you need to hit that inflection point. Especially something that Tope said, that financial services is generally a scale game. If you're playing small and you're not even investing in growth, it also might limit what you can do. So I don't know how you have been able to balance that in your portfolio, because it's a tricky one. I'm sure there are
Yeah,
trade-offs. So what are some of the
no,
trade-offs you've had to make?
no, definitely. Like I said, you need to your growth aspiration. So if you have to go through that way. So, like I said, the first thing is what kind of organization are you trying to build? So for us, we weren't just out to say, okay, we want to build an organization that has like 1 million customers within this short period of time. We wanted to grow organically. We wanted to grow sustainably. Now, I agree with you. You're not going to stay profitable from day one, but also there's a high likelihood that you'll be more prudent if you're managing your cash than if you're managing investors fund, irrespective of how you look at it. Because yes, the prudence is there, but you know that, okay, you know what, I can do another raise, right? That means I can always get another capital in and everything. It makes it easier. It doesn't make one system right and the other wrong. It just shows that your prudence will have different levels depending on your growth strategy. But for us, we've just made it in such a way that we would grow gradually, we will grow sustainably, but we'll ensure that it's not going to be like we'll be profitable from day one, but we'll ensure that we minimize the loss and we take it to a point where you're able to you can stand on your own. I mean, and the decision not to raise is not because we don't want to raise. It's also looking at other factors to say, okay, what am I doing at the moment? Am I enjoying what I'm doing at the moment? So, like I said, for me, I'm still trying to straddle the world of a full-time employee and a founder. And I'm like, okay, I'm still enjoying what I'm doing, but I also have this going, and I have like partners that are dedicated to that. I have a co-founder that is dedicated to that. We have a team of people that are dedicated to that. So it's more about the strategy that determines how you go. So there's no one size fits all solution. It's basically what works for you.
Got it. Okay. Wow, I think we can continue for another hour, but now we have to wrap up now. I'm going to give you guys a chance to say short last words if you have any. So, Tope, is there anything you want to say as a closing note?
Yeah, I mean, first of all, thank you for inviting me on this platform, Segun. I don't do a lot of these, and when you reached out, I was like, I have to be there. So thank you, thanks for the invite. I just want to say, to all the founders who may tune in, go for it. Everyone has a dream, and you should take the time to try to assess if you can achieve that dream. So whatever it is that's on your mind, give it a shot, give it a try. Yeah, there's never been a better time than now. And then, other than that, I also want to say, Afriex is open for business, whether you're a consumer or a business that needs to move money across borders. We support both consumers and businesses. We support some other fintechs in some instances as well. So my inbox is open. Feel free to reach out.
Awesome. All right. I love that. Ayodeji, any closing words?
Okay, just want to say thank you as well for the opportunity. I've actually not done anything like this because every other thing has always been more about financial markets. This is more like a hobby for me. So thanks for giving me the opportunity. And I have to take today off as well so that there's no conflict, so that I can focus on this, fully. But I mean, generally, I think similar to what I said earlier, what is very important for any founder is that you probably have a unique story. It's not going to be the same way one person has done it. So the path we are following at Veloremit is not something that is known or usual, but we're still sort of carving that niche for ourselves, and we're sort of going through that. So just find a story that works for you, build your own way. I think, that might be what people are looking at later as the way to do it. But you just have to do something that works for you. You don't have to do it the way we've done it or the way Afriex has done it. It can be something different, but you just make sure at least you're building and you're adding value. Thanks.
Wow. And if you're looking for a partner to build with, Anchor is here for you as well. Please reach out. You can connect with all of us. This has been amazing. Thank you so much, Ayodeji. Thank you, Tope. And thank you to everyone that has been a part of the conversation today. It's been so much fun. I totally enjoyed it. yeah, and that's it for today. That's how much we have time for. And we are going to be creating another beautiful topic and another insightful conversation like this very soon. So thank you guys. And thank you, Ayodeji and Tope, once again. And
Thank
enjoy the
you.
rest of the day. Cheers.
You too. Cheers.
Bye.